Welcome to another episode of the Lula SME Growth Series. I'm your host, Comfort Chabalala, and today we are diving into something that might just surprise you. Meet Sarah. She runs a thriving catering business and thought her banking was costing her 2,000 Rand a month. Reasonable, right? But when she calculated her actual banking costs, including hidden fees, wasted time, and missed opportunities, the real number was over 4,500 Rand, more than double. If you are running an SME, chances are you are paying more than you realize too. Today we are examining what traditional banking costs your business. Wayne Ramgath, VP of Banking at Lula, is here to guide us through this revealing exercise. Wayne, ready to uncover some uncomfortable truths? Welcome to the show.
Hi, Comfort.
When you show SME owners their actual banking costs, what's their typical reaction?
So, Comfort, the reaction is almost always one of surprise, sometimes even disbelief. Most SME owners assume that their banking costs are limited to the fixed monthly fee discussed during onboarding or pitched by their bankers at the point of sale. What they don't realize is that the real cost of banking includes a range of additional fees that aren't always clearly communicated upfront. These include transaction fees for payments, debit orders, and statements, which might be out-of-bundle charges that apply when businesses exceed certain usage thresholds. When we help business owners add it all up, line by line, they're often shocked at how much they're actually spending each month. For some, it's double or even triple what they had budgeted for. And in a tough economic climate where cash flow is tight and cost controls is critical, these hidden fees can have a real impact on a business's profitability. It's not just a financial shock, it's also a wake-up call for many SME owners. Many of them walk away realizing that they need to take a much closer look at how their banking partner supports their business and whether they're truly getting value for what they're paying.
Interesting. Most business owners see that monthly account fee and think that it's their banking cost. What are they missing?
That's exactly the misconception we see all the time, Comfort. Business owners often fixate on the monthly account fee because that's the number featured in advertising or mentioned during the sales conversation. But that figure only tells part of the story. For more complex banking profiles like those of SMEs, banks typically create bundled products that aim to meet the general needs of a broad customer segment. These bundles might include a set number of transactions, debit orders, or services for a fixed monthly fee. But once you exceed those limits, and most businesses do, you start incurring what's known as out-of-bundle charges. These are additional charges for transactions not covered by the bundle, and they can accumulate quite quickly. What's often overlooked is that many essential activities like requesting regular statements for reconciliations, card swipes, or even some digital transactions may fall outside the bundle. Because these charges aren't immediately visible, they tend to go unnoticed until the costs add up. So while the advertised fee might look manageable, the real cost of doing business with that bank can be significantly higher. And in a cost-sensitive environment, this can erode margins without the business owners even realizing it.
Let's talk about something that is often overlooked: time. If I'm spending 3 hours weekly on banking admin, branch visits, and payment reconciliations, how do we put a proper value on that for my business?
So, Comfort, time is arguably one of the most valuable and most underestimated resources a business owner has. Yet, most entrepreneurs rarely stop to calculate what the time is actually worth. We tend to focus on the visible banking fees, the numbers on the brochure, and assume that if the monthly cost looks reasonable, then we're getting a fair deal. But here's the catch. If you're spending 3 hours a week on banking admin, whether that's reconciling payments, visiting a branch, or sorting out transaction issues, you're effectively giving away 12 to 15 hours every month. That's time you could have spent growing your business, serving your customers, or building strategy. And it's not just losing productivity. It's also the mental load. Having to plan trips to the bank during business hours, dealing with queues, and often walking away without your issue being resolved adds unnecessary stress that a SME owner doesn't need. When you factor in what your hourly rate might be, or the value of work you're not getting done, those hidden time costs can quickly outweigh the actual banking fees. So the real question is, what is your time worth? And are you investing it in the right places? Because for many SMEs, the most expensive part of traditional banking isn't on the invoice. It's in the hours lost to inefficiency.
So Wayne, let's make this practical. How can a business owner calculate their true banking costs?
Absolutely. Let's break it down with a simple example, Comfort. We often focus on the monthly banking fee, let's say 349 Rand per month, but that's just the starting point. Now, consider the time you spend on banking admin, say between 12 to 15 hours a month. That includes branch visits, reconciliations, chasing payment issues, and activities that pull you away from running your business. Now, here's how you convert that time into rands and cents. Let's assume your business generates 50,000 Rand in revenue per month, and you're trading 8 hours a day, 7 days a week. That's about 240 working hours in a month. If you divide the 50,000 you generate in revenue by 240, your time is worth approximately 208 Rand per hour. Now, if you're spending 12 to 15 hours a month on banking admin, the time cost of this activity adds up to about 2,800 Rand working on 12 hours and 3,469 Rand per month working on 15 hours. So when you ask, what does my banking really cost me? The answer goes far beyond what's printed on your bank statement. It's not just about the fees you see, it's also about the productivity you lose. And for a business trying to stay lean and competitive, that cost can be significant.
So interesting, Wayne. In layman's terms, what are opportunity costs? And if my working capital is sitting in a low return business account, what am I missing out on?
Great question. In simple terms, opportunity cost is what you're missing out on when you choose one option over another. Think of it this way. Every time you spend time, money, or resources on one thing, there's something else you could have done with that same time, same money, or same energy. And that something else might have brought in more value. Take time, for example. If you're spending 3 hours a week on banking admin, that's time you're not spending on meeting with customers to grow your relationships or increase sales, creating new products or services that could open up new income streams, or running marketing campaigns that could attract more business. So the opportunity cost here is the return you could have earned if that money or time was being used more productively. And in a business where margins are tight, missing out on these gains can really hold you back.
If someone's listening and thinking, I need to audit my banking costs, what's their step-by-step approach? What should they do tomorrow?
Great question. And yes, it's something every business owner should do not only tomorrow, but on a regular basis. Here's a simple, actionable, step-by-step process you can follow, and you can literally start tomorrow. The first step is to download your bank statements, at least for the last 3 to 6 months. Most banks allow you to export this in Excel or CSV format, which makes it much easier to analyze. Step 2, total your bank charges. Go through the statements and calculate exactly how much you're paying in bank charges. Don't just look at the monthly fee. Add up every line item related to service or transaction costs. Step 3, categorize the charges into 2 buckets. Service charges, which include your monthly account fee and any fixed cost. And bucket 2, transaction costs, which include fees for EFTs, debit orders, cash deposits, card swipes, or any other out-of-bundle transactions. Step 4, Understand your business's transaction profile. Look at how your business actually transacts. Are you doing high volumes of payments, mostly card swipes, frequent cash withdrawals? This will give you a clearer picture of your business's transaction profile, which is crucial when evaluating if you're on the right banking package. Step 5, match the right package to your profile. Now that you understand how your business banks, use that profile to compare alternative banking products. Sometimes a package with a slightly higher monthly fixed fee but lower per transaction costs might end up saving you thousands in the long run, especially if you're consistently going over your bundle limits with your current package. And a little bonus tip, Comfort: don't hesitate to ask your bank for a fee breakdown or an explanation of unclear charges. And if your bank can't offer transparency or flexibility, it might be time to look elsewhere.
Thank you for that bonus tip, Wayne. If you could redesign business banking specifically for growing companies, what would change first?
So there's 2 elements. One is time, and the second is access to personalized support. Firstly, time. Surveys show that at least a third of SME owners feel that they simply don't have enough time or hours in the day to run their businesses effectively. Banking shouldn't be something that slows them down. It should work quietly in the background, making things easier for them. That means automating admin tasks, simplifying payment processes, and eliminating the need for unnecessary branch visits or paperwork. The second big change would be access to personalized support. Around 47% of SME owners say that having a dedicated relationship banker would make a significant difference in how efficiently they manage their banking. And it makes sense. Someone who understands your business, knows your industry, and can give you proactive guidance or solutions before small issues become big problems will be incredibly valuable to an SME owner. So if redesigning business banking for growth, we should start by giving entrepreneurs the 2 critical things, which is more time back and smarter, more human support. The rest, things like better products, clearer pricing, and improved digital tools, should naturally follow.
What is that one question that every SME owner should ask their banks?
The one question every SME owner should be asking their bank is, was this product actually designed with the needs of businesses like mine in mind? And that's where things get uncomfortable, because traditional banks tend to struggle with this question, and here's why. Most banks try to serve every possible business customer, from side hustlers to large corporates, using a handful of standard products and pricing structures. They group businesses into broad categories and then build products that try to meet most of the needs of a typical customer in that segment. But in practice, what that means is many SMEs get placed into one of 2 boxes: a lightly adapted version of a personal banking product or a scaled-down corporate or enterprise account. Neither of which option truly reflects the realities of the specific challenges of running and growing a small or medium enterprise. SMEs are unique. They need flexibility, speed, tailored support, and transparency. But those needs often get lost when the product was never really built for them in the first place. So if your bank can't answer that question clearly or gives you a generic response, it's probably a sign that their product wasn't purpose-built for your business.
Wayne, here's a challenge that I have for you. Give business owners homework. What's one calculation they should complete this week that will genuinely open their eyes?
Sure, Comfort. A simple but powerful exercise I encourage every SME owner to do is to take your bank charges for the past financial year and calculate them as a percentage of your total revenue. This means adding up all the fees you've paid, monthly fees, transaction charges, out-of-bundle fees, and then dividing that total by your annual revenue. What you'll likely discover is eye-opening. Many business owners don't realize just how much of their hard-earned revenue is quietly slipping away into bank charges. And because banking costs often feel like a fixed necessity, they tend to get overlooked in cost-saving efforts. But the reality is, while having a business bank account is essential, paying high fees for generic products that don't truly fit your business needs is definitely not. So this week, do the calculation. Understand your true banking cost as a share of your business income. It's a simple number, but it could be the start of a much smarter conversation about how you bank and how you keep more of what you earn.
Wayne, this has been incredibly enlightening. Before we wrap up, what's the one insight you want every SME owner to take from this conversation?
If there's one thing I want every SME owner to remember, it's this. When choosing your next bank, look for a partner, not just a banking provider. Choose a bank that's genuinely willing to walk alongside you on your growth journey, offering personalized products tailored to the unique needs and the real relationship banking support that you need. This kind of partnership does more than just keep your finances in order. It gives your business a stronger chance to survive and to thrive while providing you with access to experts who understand your challenge and can guide you through them. In the end, banking isn't just about transactions or fees. It's about having a trusted ally who helps your business grow, and that is what Lula is able to provide.
Wayne Ramgath from Lula, thank you so much for your eye-opening insight. To you, the business owner, knowledge empowers better decisions. You now have the tools to calculate what banking costs your business. Don't let hidden fees and insufficient processes continue eating into your potential growth. Remember Sarah? Once she understood her real banking costs, she could make informed choices about alternatives. Now it's your turn. This has been another revealing episode of the Lula SME Growth Series. Keep questioning, keep calculating, and remember, your business deserves financial solutions that work as efficiently as you do.